Ladies and gentlemen, welcome back to the channel. We're going to go ahead and get into everything you need to know for this upcoming week. It's going to be a big one. There's going to be a lot of different things that are going to move our markets that could in turn affect your money. So that's the main focus of this video. We are going to get into everything AMC Stock as well, everything that you need to know. So hit that like button and subscribe to the channel if you guys have not done so already. First things first, Friday, okay day. We were up 1.61%. We actually had really good data, Goldilocks data, that I think this 1.61% return on Friday, it could get much larger from here. I think probably reasonably so, we should have seen a larger move higher that I'm sure we will get over the coming days here. Now, this week, is really going to confirm a lot to markets. What we seen on Friday was the economy's doing well. 199,000 jobs were added. The estimate was 180,000. That's good news. In 2022, that would have been seen as bad news, beating the estimates and more jobs being created. But there's a difference because then you were at 8 or 9% inflation. Today, you're in the threes. So you want to see the economy hold up at this final stage of probably the hardest stage, getting inflation down from the threes down to the twos and hopefully lower than that. So this is really crunch time where you want to see or need to see the economy holding up. And that's what we've seen on Friday. Unemployment rate dropped from 3.9% to 3.7%. Labor market is doing fine. Consumer sentiment, the Michigan Consumer Sentiment Survey showed sentiment is well. People are I wouldn't say excited about the economy, but they're optimistic or starting to get more optimistic. What's also most notable is inflation expectations for 1 and 5 year ahead. Well, that fell to its lowest point that you have seen since 2021. It was a massive drop. So all of that is good news for interest rate sensitive names, for small caps, mid caps, for really any stock out there. That's good news. You want to avoid a recession by all means, right? Now, what we are going to get this week is really going to be the icing on the cake, if you will. We have this, I'll call it a strong economy. I mean, maybe that's the right way to say it. Maybe it's not. You get the idea, though. The economy is not faltering to a degree in which we're heading into a recession. At least that's not what the data is showing us. The second aspect is we need to see inflation continuing to fall. If inflation starts to rise again, well, that would obviously be a problem. On Monday, you're not going to have much, like at all. There's just not a lot of data. There's a 10-year bond auction at 1 p.m. and a 3-year bond auction. The 3-year bond auction really is just in alignment usually with the Fed funds rate, so I'm not expecting anything there. 10-year treasury yields, that's up for a little bit more of supply and demand, kind of where markets are expecting rates to be over the next coming years. So 10-year bond auctions can move our markets. You're also going to get consumer inflation expectations, another survey for November that is expected to show inflation expectations actually rising from 3.6% to 3.8%. You want to watch that. But you're probably going to come in lower than the estimates based on the data that we got last week. Now, on Tuesday, this is your big data. So core inflation month over month is expected at 0.3%. That is 3.6% per year annualized on a 12-month basis. That would be bad news. 0.2% is the number we got last month. If you come in at 0.2% again, that's okay. That's relatively good news. That's 2.4% on an annualized basis. If you were to come in at 0.1%, that is your best possible outcome. 0% or slightly negative might be your best possible outcome, but your most realistic outcome could be 0.1%. That would be 1.2% annualized. That's below the Fed's 2% target. That's exactly what you want to see in theory. I don't know if that's actually going to happen, but that's what you would want to see. Now, core inflation year over year is expected to come in at 4%. Last month's reading was also 4%. This would be a very nice continuation of that, just drop in inflation we have seen recently. Now, inflation month over month on the headline is expected to come in at 0.1%. In November, it was 0%. or October was 0%. November, it seems like energy, oil most notably, did continue to fall. So don't be surprised if you're at 0 again. The estimate is 0.1, but 0 could definitely be on the table here. Now, inflation rate year over year for November is expected at 3.1%. I think this is also important. I know it's just the headline inflation rate, just year over year. This is a big number that like the news will talk about, right? If you are to actually get into the twos, that would be great news there. And I do think that's possible. Estimate 3.1%. It's possible we were to come in at like 2.9 or 2.8%. That would be great news for stocks. Now, on Wednesday, you're going to have PPI month over month. CPI is consumer price index. Think about it like consumer price inflation. PPI is producer price index. Think about it like producer price inflation. So usually when producers see inflation, they tend to pass that cost on to consumers. PPI tends to lead into CPI. Now, last month, we had a very deflationary reading on PPI. You came in at negative 0.5%. The consensus for this month, or for last month, technically for the month of November, is 0.1% positive. That's just fine. I mean, I'm not concerned about PPI in the slightest bit. CPI is really going to be the main thing people are trading on coming Tuesday and into Wednesday. Now, on Wednesday at 2 p.m., you're going to get the Fed, the interest rate decision, in which we typically do, but you're also going to get an economic projection. So this is the summary of economic projections. This is going to be important because last time we expected the Fed to have the rate in between about 5.5% and 5.6%. So opening the door to even raise rates further one more time from here, that's obviously not happening. Inflation is falling faster than what some of the Fed members are expecting. But that's why this is important. Some Fed officials are starting to say, maybe we can start cutting rates in the first half of 2024 if inflation continues to fall. So this is where you get the dot plot, right? And we'll see where the Fed members, if we start to get some Fed officials that are a lot more dovish than before with their interest rate, expectations, that's going to be great news. That's going to come out at 2 p.m. And then you're going to get the press conference at 2:30 p.m. where Powell's going to be asked about the dot plot and all of those other things. So that will be important. And then on Thursday, you're going to get retail sales month over month for November. That comes out at 8:30 in the morning. You're expecting negative 0.1%. Last month was negative 0.1% as well. And it looks like the economy's holding up fine. Export prices month over month, import prices month over month. Those are expected to be roughly in line with what we seen last month. Negative 1% for export prices, negative 0.8% for import prices. Retail sales, exports and imports, that's basically your GDP report in a nutshell. So depending on how this comes out for November, it's going to move the estimates quite a bit for Q4 GDP, which Q4 GDP estimates currently sit as per the Atlanta Fed GDP Now tracker at about 1.2%. So depending if how these numbers come out, it's definitely going to affect those Q4 GDP estimates. So that's it for your day on Thursday. On Friday, you are going to get New York Fed, New York Empire State Manufacturing. That's a widely respected index or data report that people watch for, expecting a big drop there. Industrial production, capacity utilization, S&P Global Composite PMI, S&P Global manufacturing PMI, S&P Global Services PMI. So quite a bit of data as well on Friday. This week is really looking to be one where we could get confirmation of this soft landing narrative, especially if inflation continues to fall and the Fed does become more dovish in their expectations for rate cuts. If the Fed themselves start to become in more of an alignment with the markets, that could be great news because we haven't heard much from the Fed, even though markets are pricing in quite a few rate cuts for 2024. Remember, at the last summary of economic projections, the Fed was pricing in 2 rate cuts, 1 to 2 rate cuts, no more than that. Well, now the markets are pricing in 1, 2, 3, 4, 5 rate cuts. Barely at 28.8% chance for 5 rate cuts. There is a 28.0% chance of 4 rate cuts. So, I mean, that's over double what the Fed previously forecasted at the last summary of economic projections. So if the Fed reiterates something along these lines and they say, yeah, we might get 3 or 4 rate cuts, the markets might start to price in 5 or 6, right? Because that's kind of how the markets operate. So that's going to be a big part of this upcoming week, is really that summary of economic projections. It will allow investors, institutional investors, money managers that manage a lot of money, to say, yeah, if the Fed's now saying, you know, the markets are right here, if that becomes the narrative, then a lot of money managers and hedge funds, you know, are going to feel more comfortable buying your small and mid cap stocks, because right now some people think there's still only going to be like 2 rate cuts in 2024. I mean, I find that hard to believe. I think the markets are probably correct with 4 or 5 rate cuts. And if, again, the Fed does confirm that, a lot of big money might start to plow money into small and mid-cap stocks, into IWM, which could have a very positive effect on AMC stock itself. Remember, when $100 goes into IWM, like $2 or $3 of which is going to go into AMC stock, roughly speaking. It obviously varies day by day, but around that range. So just more money going into small and mid caps is going to help AMC regardless, right? Regardless of where AMC stock is at on a day-by-day basis. That is something that I think could easily give AMC at least a double from here, right? That's not even considering shorts covering any good news that might come out. Now, for AMC stock here on the Ortex data, you have a short interest percentage of free float at 10.04%, $135.36 million worth of short positions. Days to cover 0.91, 19.85 million shares that are currently sold short, 11.37 million shares currently out on loan. Cost to borrow 1.13%, utilization at 26.33%, and a short score of 53.4 out of 100. Cost to borrow max at about 9%, cost to borrow minimum at 1%, cost to borrow average at 1.77%. So not the most encouraging numbers over here, but again, if you are someone that believes AMC will go through a short squeeze or some kind of squeeze event down the line, you gotta think these numbers are false. If you believe the short interest is really 10%, then you can't really make an argument for a short squeeze at that point, or not a large one at that. So just keep that in mind. I don't want to be too pessimistic there. I think most people think the short interest is a lot higher than what the Ortex data says it is. Now, for this upcoming week, you are going to have a lot of option activity as well, mainly to the call side. You have 3,600 calls currently in the money, 161,000 calls out the money, 24,000 puts in the money, and 74,000 puts that are out of the money. So, you know, a lot more activity here on the call side. We will have to wait and see coming tomorrow. Once the data does fully aggregate for what we've seen on Friday, then you're probably going to see these numbers even higher coming tomorrow. And that could set us up for some form of potentially even a gamma squeeze. We'll have to look at that a little bit more in the next video. But really, this week is going to be mainly focused on the data coming out, the CPI, and then the summary of economic projections is going to be potentially a game changer for our markets and really confirm what the markets have started to price in already. And that is, maybe we should buy small and mid-cap stocks if we're expecting a bunch of rate cuts and no recession. So that's going to go ahead and do it for this video. In the next video, we're going to go over exactly what I am expecting for AMC stock in this upcoming week, a price prediction, if you will, and go over a bunch of other things that I think you just need to hear. So hit that like button and subscribe to the channel if you guys have not done so already. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.